Welcome to Beyond the Numbers. If you find these videos helpful, please like this video and subscribe to the channel. It really supports our team. And if you'd like a heads up when we share new updates, tap the notification bell so you don't miss what's next. We appreciate your support. With that, let's get started.
Well, hello again, Soul Swell family. Greg Souls here with the update. First, on the family front, we sure did have a fun celebration during the 4th of July. It was unfortunate that we were not together, but we had a great time celebrating. And actually, what we did something really unique. Nicole had this idea. She said, "Hey, why don't we every hour on the hour send a picture of wherever we are, whatever we're doing, and we'll just send it out in this group message." It turned out to be hilarious. And so we did it first thing in the morning all the way till the evening, and we just sent pictures of each other all day long. So I included a couple of them there just so you guys could take a look at it. But we had a great celebration, unbelievable 250-year anniversary for our country. I do remember the 200th anniversary. I was about 8 years old, but I remember that. I can't believe 250-year anniversary. But I hope you had a great 4th of July. We certainly did. My very best to you and your family. Market wise, well, again, these Iran tensions have kind of reared up again. As I record this, we had some issues here where there were some more bombings going on, it's kind of touch and go here. And we did see oil prices pop up again. We saw oil prices drop all the way down to about $66, $67 a barrel, where we popped up to about 72, 73 dollars a barrel. So that's not good. If we start seeing that continue to increase, did not go to that big number we saw earlier when the war first started, where we saw oil prices get up over $100 a barrel. That's good news. So perhaps the market's optimistic that this will be a temporary flare up and not an ongoing thing. So if that's the case, we should see oil prices hopefully come back down again. And again, this is important because it creates inflation. The Fed met. We saw the minutes that just came out. A lot of ambiguity in the minutes. Normally we see more clarity on what the Fed might be doing. But with the new Fed Chairman Warsh, he seems to be a little bit more not so clear on what exactly the Fed wants to do. But it looked pretty split on whether they wanted to lower rates or increase rates. So I think we're just going to have rates right about where they are longer. And that's kind of the way we're seeing it right now. Because they're split, there's going to be a lot of wait and see how these employment numbers come out, see what inflation does, and then the Fed will make some decisions on what they want to do with the Fed funds rate. But right now, we're not anticipating any increases or any decreases on the Fed funds rate. So the market's got to work through that process to find out what direction it's going to go from there. So, but overall, the markets look good. As I record this, the S&P 500 is just about 1% off its all-time high. NASDAQ's off about 3% off its all-time high. We saw the Mag 7 has really been struggling here lately because they had such a huge run up, a lot of profit taking, but the valuations of the Magnificent Seven stocks is really kind of pretty reasonable right now. It's lower than it's been in a while. So, but the good news is we've seen the rest of the market kind of participate in this bull market. So it's been a pretty strong market overall. Equities look good. The Mag 7, there might be an opportunity where we might see another move forward as these earnings continue to come out, because earnings momentum has been phenomenal. So that's what's really warranted this big run up in the equity markets in general, but specifically to the tech stocks and specifically to the Mag 7. So overall, the equity markets look good. Expect a lot of volatility. As I keep saying every time we record these, volatility is going to be out there. But bond markets still look pretty solid. We're hanging right around 4.5% on the 10-year Treasury, 4.4, 4.5. And so we've been in a little trading range there for a while. I don't anticipate that to drop dramatically, but I don't anticipate a big spike up, particularly if the tensions of the war start to really subside. So overall, everything looks good. If there's questions, concerns, or anything we can do for you, we're always here for you. My very best to you and your family. Take care and God bless.